Hey guys, what's up? So basically, jumping straight into it, the DXY is looking phenomenal for this week ahead. What we're seeing is that we've created this base here where we near missed it, we've now filled it, and we've retraced on the daily. The great thing about this is because we've had that daily retrace and we're now getting the follow through, we're just looking for that continuation to formulate. And I think this is where a lot of people could get a little bit, could get a little bit impatient. It's like trying to jump into trades, which, don't get me wrong, there's an odd chance that it could play, but then at the same time this could turn into quite a few things. So you just want to be mindful that even if you do that and it turns into this, right, we wouldn't be surprised, right, because then you'd basically have that to that. But I don't think that's going to basically be the gameplay. I think we're basically looking for this where we're going to get our continuation and then we're going to go along with it, but we just have to be patient and wait for that. And I think we're going to see a lot of turnaround on the counter related pairs as well, which we're already seeing. So that's going to be amazing. DXY is looking phenomenal for longs. I don't think there's any need to look for shorts just yet unless we start breaking these lows, but at the moment, because we're pushing with momentum with the daily time frame now, it's great. And then you can see how the weeklies ended as well, where we did have this bearish pressure, but you can see now that the bearish pressure was only to tag into the area of liquidity, and now we're getting that turnaround. So we need to wait and see how the next week goes ahead, because if this does continue to become corrective, then we understand that this is just another correction for continuation to the downside, and this area holds less weight. But at the moment, because we're holding in this area, if we get deliberate price action continuation to the upside, it's great. Anything above this area would make it even lower risk. So if we do break above here and create continuation here, that would make it higher probability for upside movement, and I think that would be better positioning. Over here is slightly more risky because you're within this particular area here where this can still turn into something a little bit more complex for a move to the downside. But all in all, I think positioning for the upside movement is phenomenal at the moment, and yeah, we're looking pretty good. JP225, so the JP225 is also looking quite nice. We did get a bit of a sell-off and we didn't quite come up for it yet, so I am still waiting for structure to formulate here. The odds are we might sell off and create something a little bit further down and not come and tag that area just yet, which is completely fine as well. It's just, if we can get a pullback into these areas, maybe even near miss it, squeeze lower, come back up, tap into it, get even a risk entry in these areas would be phenomenal, or a push down insurance entry would be even better. That's basically what I'm looking at for the JP225. I'm looking to play this total range and then just see how it overall moves. I think with a lot of these indice pairs being overextended, there could be potentially some very phenomenal price action to follow. So going to be waiting and being very vigilant with that. Aussie CAD's another one. So as you can see on the pink marked ones are the ones that I am filtering into my watch list, wildcards and additionals, but essentially there's a lot of good pairs in there as well, which I did decide not to add into my watch list, which I may reconsider tomorrow as I go for it again later tonight, but just something I wanted to point out. So we can see that we've tapped into this hook point here where we had this correction before we had the massive sell-off, and then the various, so we've kind of filled the majority of this. The nice thing about this is when you look at it on the daily, you can see that we filled it with a evening star over here, and then now we're getting follow through even further. What we do want to see is more continuation, but there was this section over here. It just was very wicky and very messy. Aussie CAD can tend to do that as well. It's just one of those things where, you know, you'd have to read through the price action a little bit better. I was personally waiting for price to tap into these areas and then look for the short, but didn't quite get it. It is what it is. So now I'm just waiting for the even better lower risk entry. If we can impulsively push through here and give us continuation down here, that would be great. If we do come up and fill this area and then get an entry in those areas, it's possible that I could be looking for an insurance entry or risk entry play depending on how we get there, but more than likely I'd prefer the entry down here. I feel like that would be a lot more deliberate. It'll be more in continuation with the high time frame move. It's lower risk because it's below this low. This can still form into something really messy, but I don't really think this is the territory where this turns into a larger flag. I think if we're going to go to the downside, we'll go from here. If we're going to pull to the upside, then that's your base, and then we start to get a clear message from the market. So positioned really well. Aussie Swiss, so Aussie Swiss is actually quite nice because what we can see here is that, okay, although we didn't fill the high value area all the way up here, that's completely okay, because we've actually had a follow through now, and if we get deliberate continuation price action here, we may even just get another follow through to break these lows and maybe even continue to all-time lows, because as we can see on here, this doesn't necessarily need to be tapped into, but at the moment this is a very corrective pair, so I'm not really banking this to be the one that just kind of goes and keeps going. I think more than likely this could become a little bit more complex than I'm anticipating, and we may see something like that formulate, or this could be the start of something else that I'm not fully aware of. There's just too many variables there, so I don't want to overcomplicate it. I just want to see it for what it is, and we have push away. If we get continuation, perhaps I can trade it into this low and then manage it accordingly, and then if I can get into that for a risk reward, measuring that up even around about here with around about 12 pip stop, yeah, I could still walk away with roughly around about 6 to 7% trade on that. So it really just depends on how it formulates the continuation pattern, and then I'll look to take advantage of it. More than happy to just let this one slide next week, even if it's not clean, because it is Aussie Swiss pair. We do have these gaps that are high. Even if this failed, I wouldn't be too surprised. So it is a level of higher risk, in my opinion, to take a trade like that, only because we're not really trading with from a key value area. But what we can see is price is moving in this direction. So if it did fall through eventually, you could potentially be trading into those lows, and that's what I mean about price potentially just turning around here, where it's just not really the dominant direction for price. But like I said, it's one of those complicated ones where we just need to wait patiently and read through price. So I'm looking at that, and if I just move that out of the way, and then we had this, so you can see that, you know, you had something like this, and then it moves to the next move. Perhaps maybe we get that push for the next move. We're down here, next continuation, and then we keep going, and that's basically it. Aussie yen continuation, very simple. We can see from higher time frame we've tapped into these value areas here. We've then rejected on the weekly, which is nice. We've had a follow through on the following week. Now there's a bit of a wick there, which is fine. On the daily, we can see that now we're consolidating sidewards. 4 hour, we can see that we're creating structure. So that's basically what I'm looking for, is a completion of the structure. We have a 1, 2, 3 sections, create a base, create a middle section, then we'll basically get that third touch for the short. And I think AJ is probably one of the nicest ones amongst the yen pairs, but yeah, it's looking pretty good as well. Aussie US dollar, likewise, again, I'm just seeing this as corrective squeeze. This one's a tricky one, to be honest, because we can either go from here and then not tap into those areas, or go there with a V shape and come in there. So I'll be honest with you, I'm not looking for that one. I think I'm going to wait patiently to see if we can get the V shape into these areas. So 1 hour, and then it just kind of, you know, does whatever it has to do, comes into this area, and then insurance entry if possible. But I'm not really too bothered. Like I said, it's one of those ones. It's just I don't prefer this price action, to be honest. This isn't my go-to, but you know, if that happened, then we pushed away and we got this, I wouldn't really be too surprised on the short. So just want to bear that in mind, that keeping it so simple for that entry makes it a lot easier as well. There's better euro pairs on, sorry, USD pairs on board at the moment as well. It's just obviously we can create that little double scoop here and then drop off, and then that's basically what I'm looking for. I just personally think there's better pairs, especially once again with the DXY turning around. It's great, but at the same time we just need to be a little bit more patient with a lot of these pairs, because really and truly, like, this is not the best structure in the world, I'll be honest with you as well. It's just we're literally trading it in line with what's happening with the other pairs. So again, just wanted to bear that in mind, that this may not just be the run that keeps going to the downside. We can still sell off a little bit to then come back up, and I think people should really much be aware of that, although we're moving in this, we're still within this corrective wave, and the DXY is moving to the upside, but it can still get corrective here. It can just turn into one large correction, while pairs like Aussie US dollar start moving to the upside. So Don't completely flip your bias to shorts. Also stay neutral for the potentials for the longs to come into play as well. But right now we're seeing momentum move in the shorting direction, so we just need to wait for something deliberate and clear and then take advantage of a sequence that could potentially play. Aussie New Zealand, another good pair actually, to be honest. Just want to see this one kind of complete on this area. So we have that 1 2 3. I don't think it's really going to hold because we're getting that strong momentum. If I look at it on the daily, it's been quite corrective on the way up, so I just want to see a clear follow through. I think with Aussie New Zealand, I would just like to see this do whatever it needs to do. If it does this continuation, then great, we can look for upside. Otherwise, if we just kind of sell through and we create deliberate price action down here, then I think that's a no-brainer message that we're going to go short. So all in all, I think that's fairly simple in terms of a trade thesis. I think I'm happy with these two scenarios. Either larger flag on this level and we move higher, or we push down, get continuation, and we start retracing and moving back to the downside. CAD Yen, not my most favorited out of the yen pairs, just because structurally it's not really completed. I think a lot of these yen pairs still need a bit more development. I think either we get something like that, and then it comes up, comes down again, then we get a 3 touch and we can go, and then at the end of it we can see something like this where, you know, we're like, okay, that makes sense. In terms of structure, we have enough for this to continue to the downside now, built some weight and so forth. But I think, again, for another pair, you know, it's tapped into this little hook point, or I believe it just about missed it. Let's have a little look. No, yeah, it did pierce through it. So even so, it's still valid for shorts. I don't think that we should completely be looking off the table for shorts, because I think shorts are definitely there. If we can get something like that, that's clear, deliberate, and we can just basically take that trade into the next area. I think with stop loss, yeah, you could probably get away with around about 50, 40, I think 40 at most. I'd say 50 would be safe, and then yeah, you could trade that into however. So to the low, you probably got about 3% there, so that's pretty good. And then to these levels, 4, 7, and so forth. So that's that. CAD Yen, CAD Swiss. CAD Swiss, I'm not really interested in. I'll be very honest with you. Now we tapped into that low, kind of scooped, coming back into it again. It's just one of those ones where I think it's messy, but then if you look at it in hindsight and you look at it for what it is, you can see it's just basically squeezing. So you're in a corrective channel right now, so I wouldn't be surprised if this just continues moving in this channel to the downside. And because of those reasons, I don't want to be getting caught up in some messy price action right now. This just turns into a runner channel, continue to the downside, and you know, you don't really get clear entries, and again, it's not something I want to be involved in. Now for a yen pair, I think Swiss yen is probably one of the nicest ones amongst, because what we can see on it is we had the push away, we've broken below this price action, now we're creating continuation here. The real question is, how do we complete on this? Do we come and tap into these areas? Do we create something down there? We have a bit of a base here, so I think in the best case scenario, this is what I would wait for. I would wait for price to tap into this area and then go. I think I'll definitely reconsider this one again, because it has a clear push away and then it's creating the deliberate price action there. Now it is fairly large, but the structure is there. I think definitely, even if we had a stronger push and then clear deliberate price action down here, it's great. I think we just need to wait and see and get a clear message from the market, but it could be very, very good. Awesome. So I just had some breakfast and I am feeling incredible. So if you wanted to know what a full-time trader has for breakfast, it's eggs, avocado, gluten-free bread or normal bread, and a bit of chili oil. Actually add a little bit of this Chinese chili oil on top, makes it feel a little bit extra, but I think that's my Asian side coming out. So Euro GBP is looking nice. Insurance entry push down here, and then we get follow through on the 1 hour, which is really good. Look, it doesn't really have to be the cleanest, it doesn't have to be the best, but really and truly, I'm looking for that deliberate price action, clear follow through now. Don't want to be seeing this corrective price action coming in. I want to see that follow through, deliberate price action, creating a base and a high, and then we just move lower, and then that's it. As simple as that. That's all I want to see. I want to see this as that's the top of the range, two tops now, two bottoms, and then we come in for the third and break through. If we do come up for a third up here, okay, it is what it is. We can just re-evaluate. I don't think it's likely. I think it's likely that we could just go in with the two now. We can get that pushed, insurance entry in short. It could be even an internal V-shaped scoop in here. So what you just need to be aware of is if we tap into this and now we push lower, we leave a little print like that, we sell off a bit, and then we just come back up and then all of a sudden tap it and sell. That's another area where you may want to just look for an entry over here. Now, it's not the easiest one to decipher, to be honest with you, but that comes in with a more complicated way of just taking it. But you could take that entry there. So you can see that we've had the follow through, the push, we left a little point, pushed away, tapped into it, rejected, closed on the hourly, and then we went. You could even refine that if you wanted to, but I think hourly would be more than enough most key scenarios. EA is nice actually. EA is very nice. So but this is not the best area in the world, I'll be honest with you, right? This one is more significant and this one stands out a little bit more to me, so I'm happier with just leaving it on there. But really and truly, we have this point above as well, so this can just still trickle, make its way and just move up higher. So if you are going to be putting this one on watch, you have to understand that you may put it on watch and be looking for the shorts, and then this goes long and you miss the long, right? Because what can we see here? We can see large bullish candle, large bullish candle, large bullish candle, three strong bullish candles indicating that we may just get a strong move to the upside, which is completely fine as well. You know, we see these things, but how can we take advantage of it? Well, simply, I want to be able to see if this rejects, breaks that low, gives me continuation, can I manage it into this low? Reason being is if I manage it into this low here, or even the one after it, right, probably not likely this one, but this one here, and then if this turns into, let's call it this, then at least I was able to manage it from here to here to a break even. So that's basically what I'm really banking on. I'm not too concerned about this wick too much. I just want to see it just really follow through. So like I said, if we can get strong 4-hour momentum to the downside and then followed by a 1-hour continuation, that will leave me nicely into Tuesday London session and I'll be able to position myself for a short. Now the odds are, because it is an Aussie related pair, it may just be an evening Asian session trade. So we may get the follow through to the downside, clear deliberate price action over here somewhere, and it's a little bit more tight, and then we get the next short in. So just some points to keep in mind, and obviously just going to jump to GA quickly. The exact same thought process here, right? I want to see the exact same thing across the board. I want to see them correlating. I want to see them working as brother and sister pairs. It's not always perfect, but if we get it, we get it. As we can see over here, we have that point above as well. So don't be surprised if this just continues and moving higher because of the momentum that we're seeing. But at the same time, I'm looking how to play these together. So if I'm going to have one on, I'll most likely have the other and then size them both up and see which one works out better. Last week we did have a few trades on board, which I might just be able to go through at the very end of this. But all in all, it's very clean and clear, right? We can see we tapped into this. We've actually just correctively scooped and just refilled this. Now we want to see how we respond to that. If we can get that clear rejection from there, and we can see that, okay, price is rejecting from there, we've created that mini double top within this overall price action. Perhaps we can see that follow through. EuroCAD is one that I just don't think is fully ready yet. I think this can just keep trickling to the upside. It's one of those ones where you can see it's within this larger range. And when you look at this range and kind of just really just see where we are, we're kind of just hovering towards the upside now. Now we've broken this high, which is fine. At the same time, we've come in correctively. We're not really getting the follow through that we wanted just yet. You know, we kind of pushed to the downside, failed to commit, pulled back up, and now we're just getting a little bit more messy, which is giving me a clear indication that this could actually be a part of two things. Its own little bit of price here, or it could be a part of this where, you know, just that comes in here, comes in for one more and continues, or then again just creates a large flag and goes, or it just goes, right? So either way, I'm not really bothered about the scenarios of what this could actually be. I'm not looking for continuation to the upside on EuroCAD because there's much better pairs to filter through. It's just I'm aware of what could potentially be formulating here, but where my real interest is on these two rate lines. So I have no business to really waste my time on these particular pairs right now, because really and truly sequence has been quite aggressive, and a bigger pullback would be due at some point, not always necessary, but at the same time I could get positioned on some much better pairs, better protection, better risk reward, and we're not trading directly into a reversal territory. So that's the reason why I didn't put EuroCAD on watch. And I think, a lot of the time we have to look at the potential. Even if I got positioned on that, I might be out for a 5-1, 6-1, right? There's nothing wrong with that, but at the same time, there's other pairs where I could be, if I'm holding through it and it's going, there's the potential for it to go to like 7 to 12 to 15 onwards. So the odds are most likely I'll be out usually around about 10 to 15%, but on the off case chance it does go for a substantially large amount, it is what it is. Euro USD, so this one's stunning actually. As you can see with the DXY, we did have that retrace. You can see on the daily, we also had the daily retrace. We actually wicked through it as well, which is nice. 4 hour, we did get a bit of follow through here. Wasn't the great start, but when you do look at it on the hourly, there was, push, messier sort of section here. Failed to create continuation, which is fine. Continuation, push, continuation, and now are we using this as a reference point for us to just come back up, V-shape and go? And this is in line with all of the other forecasts that I have with the US related pairs. So with the DXY, I can't really tell you too much, because if this, let's say this is your base, then I'm essentially waiting for that to come into the base to then V-shape. But at the same time, I'm not too concerned about that. I just want to see this. If I can get that, then I'll take that entry. I think that's clear as day is for me. Perhaps maybe even a risk entry depending on it, but I'm not really too confident with that risk entry there. Stop protection might be a bit too large for me. If I do get that deliberate price action here though, or a little bit further down in the run, I know my risk reward in terms of protection is there. I think even with the risk entry here, if I did get the retrace, I would probably be upset with myself if I took a loss in that. So for those reasons, I'd probably just wait for that. Even if I went reduce risk entry, or if I went risk entry, still fine as long as I'm covered above these highs. Yeah, it's good. It's good. I really do like the whole thought process around this. And then to the low, I probably got about 3-1, 2.5-1, and then I've got around about 3.4. And then we're looking at the bigger move ultimately, where it does end up dropping through, and then we've got a pretty good scale to go with. Obviously, just look at this as a 30-1, right? Think about all the scaling opportunities that you could potentially have on the way down here as well, if this is the run to go. So we're basically looking at this as one big sequence to go to the downside, and how we're going to fully capitalize on it. Now, we don't have all the data in place right now, but we can anticipate how price is going to be moving. And studying through previous price action, we can see that how price is moving and what price does and where it takes out liquidity and whatnot. So utilizing the characteristics of Euro USD, it's very easy to trade and you can make a lot of money. So you want to be patient with that and definitely capitalize when needed. Euro Swiss feels like a little bit of a trap, because we've got this base here, we've correctively pushed away, we're hovering in terms of a continuation from that impulsive move. This could easily just turn into continuation and move to the downside. Yes, this can also just move to the upside. So for those reasons, I just completely took it off. You have to also see from the higher time frame where we're actually moving from, and really and truly it's nowhere incredibly significant. If I look at this, it's like we have this high, we haven't really even tapped into it, which is fine because it's above that high. We have this area where it kind of just pushed out, we tapped into it, we pushed up higher, we didn't hit anything in reference to anything in particular. However, we did have this level of a retest area here. Again, not something that is very significant to me. And then we've just had a massive sell-off and now a push back up, and it does look like it's just corrective. This looks like it could potentially be your phase 1, phase 2, phase 3. Not in the cleanest way at all. So for those reasons, again, happy to leave it off, because last thing I want to do is get caught up into this and then it drops off, and then you're looking at that and then it moves up and you're just all over the place with this, and then next thing you know, you saw it like this and you're like, I knew that. But really and truly, it's like, when do you ever take trades like that? And you don't really want to, because you can see that it's very, very unclean in the sense that it will be very difficult to trade. But bearing that in mind, you know, there's much better pairs to trade. Euro yen's actually quite nice as well as for a pair. We can see here that we have we can see over here that we have this level of rejection now, which I do like. So we pushed away from the high value area. We didn't really create the cleanest continuation, but over here we are squeezing now. Euro yen is nice, but I think there's nicer yen pairs onto the table as well. I think what would be nice is if we completed on this continuation, we pushed down, create a hover, and then we push to the downside. I just don't like the fact that we went from large correction into large correction into large correction. Now the sequence is technically there, it's just really and truly, like, I'm just seeing that across the board, and I'm just not saying that this is a continuation to go to the upside, because we are coming from a good area. It's just I don't know, I just really don't like the sequence of it right now. It's really messy, it's very all over the place. I would really want to wait for better market conditions, but we can't look for perfection. So really and truly, if we are going to be looking at this for an entry, we have to see it as a clear section 1, section 2, section 3, rejection, insurance entry, and we can go short. If the insurance entry places the hover and we get a bit more of a weighted flag, then it's even better. But odds are it might just go without you, and you just need to practice that level of patience a bit more, where a lot of people would get very FOMO and just want to jump into the trade and get caught up into a bit of a messy price. So just something to point out. Euro New Zealand decided not to put it on watch, even though we're really approaching this area of interest. I don't know, it was just something about it that I just wasn't really ready for this pair, because you can see on the weekly how it's just solidly pushing into these areas, right? And if we look at it from overall perspective, we have a push up, continuation sidewards, push up. So longs make sense, right? In terms of, you know, move up, move sidewards, move up, right? Then if I zoom into the daily, we can see here that we've just had solid continuation. 4 hours a little bit nicer, because we can see that we are actually corrective. We have impulse correction, correction, large correction, push, a bit more steep of a correction, more of a running channel, and then push up, and then again one more of a messier channel, and then we're just kind of correctively coming into that area. Now, could we see rejection? Yeah, absolutely we could. But could this turn into something more complicated? Yeah, of course. You know, I wouldn't even be surprised if something like that did happen in these areas, and then you just get caught up in a whole bunch of mess because you are. What I would personally want to wait for is something like this, and it could take time, but these are the ones that are really worth waiting for, right? Where you get the clear rejection, you've moved away, and then, you know, you get something deliberate that goes into the line here, and you can capitalize on that like this, right? Had you had something like that, then yeah, it's clear as day. I mean, obviously it won't be probably exactly the same, but all in all, that would be good. Doesn't even have to be that low down in structure, it could be even here. If I did get something like that, I wouldn't really hesitate on it. And that could shape up by, you know, giving it a week, maybe even next week, there could be the beginning of this formulating, but I would want to really wait for something clear, deliberate, and then just really goes in line with everything. And I think something like that would be a better play for me, but I know something like this would take more time, but at least the trend will be more confirmed, and we can evaluate the sequence once we get it. So it's better to just wait with a lot of these pairs. GA, okay, I went through GA, but just one more time, just to kind of point this out. GA is still in an upwards move, right? So we don't want to just look full bias on shorts. This can still move to the upside, but 1 hour, just to quickly go over that quickly here. If we do push and break that low, create continuation, and it looks very deliberate and the sequence is there, I wouldn't really hesitate on it. I would like to see this, because I wouldn't be surprised if it shapes up around about here. What I just don't want to see is that price did this and it just got very messy and came in here. That's not the sort of price action that I'm looking for in these areas, where we get this sort of running channel to move to the downside. Now, it's possible, it's not my preferred entry for the reversal in those areas. GU, same as EU, and AU is V-shape, so I want to see it come tap back into these areas and then go. I am aware that we could create something smaller and tighter down here, which is fine as well, but more than likely I'd like to see that come back up, scoop, tap into these areas, and then potentially get entries in those areas, we have a massive room to play with as well if we do move with rejection. So DXY is really leading us on this one. If the DXY does go bullish, then pairs like GU, EU, and so forth are just going to completely fly. So we need to see them really power up together. GBP CAD, I left this one off actually, to be honest. Now we are moving strongly to the upside. I was looking for pretty much a few continuations along the way here. We just didn't get them. So right now I think this is territory where we could be developing a larger flag. Next week, if you wanted to put this on watch, I wouldn't really be surprised, but I personally would want to wait for some more time on this and then just basically see how that develops. And then if we can come back into, call it even those areas, and we do this, and then you have your two tops, your two bottoms, you could basically argue the point that you're ready to go here. I think this is your better point of interest here, and then just be aware that you have that little wick down there, but that's basically it. And then if you wanted to draw on some structure, you could basically look at it like this, and maybe even internally we may not even come all the way up. Your base may be here, and you get something like that. Listen, at the end of the day, if it lines up and it's there, it's worth it. And I think that's just a very obvious clue for a lot of people that something like this can still be very profitable. I mean, I would put that on watch, to be fair, depending on how the middle section shaped up and everything. But like I said, there's so many other pairs on watch that I'm not married to this one in any way possible. I just want to see how it completes on itself. Nice. And then we got GBP Swiss here. GBP Swiss again is another one where look, these Swiss pairs could really just mess about with you right now, and I think it's one to be patient with. I just want to really see it tap into a proper value area, maybe even like these areas here. It's one of those ones, like even if it's sold from here, I wouldn't be too surprised, because call it, you've got this point here, you've basically done enough in that arguable sense where even if it's sold from here, you look back on it and you're like, well, I'm not too surprised, because you look at the overall move on the weekly and you can just see how price has been moving. So that's basically the thought process behind GBP Swiss. GBP Yen, I just don't like it, really. I think GBP Yen is still got potential. It's a little bit better than what we saw with EJ, because what we could see is, that completely fails, retest the back end of this, and then we push, get an insurance entry and go. Yeah, for sure. But then you can already see that it's already kind of getting this corrective slope as well, kind of putting a little bit in the off-putting sense here. So I just want to kind of wait and see how that one develops. But if we get it, we get it, and we can just kind of take advantage of it moving forward. And then GBP New Zealand. I think GBP New Zealand is definitely similar to how I looked at Euro New Zealand. I just need to wait and see how that fully develops. Now we are coming in with a 1, 2, 3, which is nice. We're tapping into that value area. We do have this point above and then the value area above it. We just need to wait and see, really. If we can get clear insurance entries, then that's a go-to. We push up, solidify that downtrend, and then we get some clear continuations. Yeah, that's a no-brainer. Like, you wouldn't want to hesitate on something like that, because you've potentially got a clear range into at least these lows and then these lows and then so forth. So something like that could definitely be there. I think it's definitely worth setting an alert on it when you do start breaking those lows here. I think that's your line in the sand here, and then we'll basically go from there. Yeah, so yeah, if we get that, breaks that, pushes any continuation below that low, we can basically get positioned really well, even if it's just about through it over here, retesting the back end of it, it's fine. What we want to see is that clear, break above, solid push back in, and then we're getting deliberate price action. And the nice thing is it will be back within this whole overall structure to just see that kind of play back into the downside, but not marrying these short trend lines, just kind of seeing it as that ray line as the line in the sand. We tapped into this and then we're rejecting. Obviously, if you did take trades in here, you are more so in a riskier position, because this can still just kind of continue moving higher. It can create something a little bit more developed over here as well. So kind of just taking it over here would kind of eliminate those variations of what could potentially happen, and then you're basically taking that as the lower risk position because you've eliminated a lot of the variations. New Zealand US dollar, this one's quite nice, man. I'll be honest with you, it's It's a tricky one, and I think I'll spend a bit more time thinking about it. But what we did have is we tapped into this, we pushed away. We're in that move to the downside now. The weekly looks stunning. The monthly wise, we're just kind of correctively moving to the downside. The daily looks great as well. We are in clear momentum to the downside, especially a lot of these New Zealand pairs. We're seeing across the board that they have a lot of selling momentum in it, so something to definitely just reconsider. The only thing I don't like about it is just how we've moved away, really, and the fact that this is just overall quite corrective is just kind of a little bit off-putting. But we're breaking these lows now, and if we just see deliberate price action here, where even if we had something like this, where we came into this area for a short, I wouldn't be too surprised that you go into the 1 hour and then, you know, you make do with the structure that you have. So you see something like that, and then that lines up with the V shape on the related pairs. You know, something like that would make sense because we've cleared this low, we're breaking this, we're essentially retesting that a little bit, which is relevant, but you know, we have all of that, and then we're just basically taking it into the next low here. And then if you look at a risk reward on that, should be pretty much okay. Say you even get with a 10 pip, you're looking at 5 to 1 into that low, and then with the DXY moving higher, it may just plummet to the downside, and it turns into a pretty hefty trade. So that is basically what I am anticipating and looking at for it, but I'm just not too sure if I want to be filtering this one on. But I definitely think it is better than GBP USD. Yeah, I'll definitely have to have a look over it, because the odds are that this just continues selling off and doesn't really give us an entry, where some of the other related pairs may just kind of shape up and give us a cleaner entry. So we just have to wait and see. Same thing with New Zealand CAD. We can see that we're just kind of dripping off at the moment. We did have that sort of corrective little sort of running channel, but it's just, yeah, it's one of those ones now where need to see some clear deliberate price action, because typically that's not the type of price I want to be shorting into right now. I want to be seeing some clear deliberate price action to take continuation to go short. So I'm going to stay out of this personally and wait for something a little bit more clean. If we do get a push down and for whatever reason this shapes up, I could take advantage of that. I could understand it and be like, okay, cool, that makes crystal clear sense to me. I'm happy with getting positioned on something like that to then go short. But like I said, there's much better pairs on watch. New Zealand CAD, look at the sequence as well. It's not really the one I want to be really getting positioned on for shorts. So I'll filter that one off for some of the other ones. Now, the other one that I did have for a New Zealand Swiss, for a Swiss pair, was New Zealand Swiss. And reason being is, even though we're trading at these lows, if you do look at it, we've tapped into this area of liquidity, we've squeezed into it, arguably 1, 2, 3, doesn't really matter. We've basically filled that liquidity, we pushed above, and then we kind of just pushed, and now we're coming in for the level where we get the hover. What I would like to see is if we get deliberate continuation in these areas, I could then take the short in to fill the wick to the next point and so forth, and positioning would actually be pretty decent on this. So if I get in on here with even, not too sure about these Swiss pairs, but I'll say 20 pips stop on it. Even with 20 pips, I take a 5 to 1 into that wick, next one about 7, and then to the low around about 10 to 1. So it's still pretty good, and that's with a 20 pip stop loss. If I can get away with spreads and everything, you know, it does turn into a complete different trade at that point. You can even see over here that risk entry, reduced risk entry, insurance entry is there as well. I wouldn't go with the reduced risk, but I would definitely go with the risk or the insurance entry on that. And then just basically wait and see it through. So it's one of those ones. I think it has definitely got something to it, especially if these New Zealand pairs are all pretty much going to the downside. If we get clear deliberate price action there, that would make sense, because what we do have is, you know, this one section, so that's your middle section, push down, and then we get the next continuation, push down, next continuation, maybe over here, over there, and then we fill that, and then maybe we continue going, and it turns into a much bigger trade than we anticipated. But Something to just definitely keep into mind when looking at this. So I think overall range, we're looking at that, and then we're just basically looking at that to take the hover into the next point. Then I've got New Zealand yen, where if we get a clear deliberate continuation like this, I'll definitely get involved on insurance entry. So we have the first chop. If we near miss it, we come in for the fillet, we get the two bottoms, and then we come in. That'll be really nice. And then you look at it from a higher time frame perspective, especially with all these yen pairs selling off. If we do get that consolidating price action, it does change a lot of things. Especially you look at New Zealand Swiss, you look at Japanese New Zealand yen, they need that bit of consolidation to actually make it, give it the next part. New Zealand US dollar, so it makes sense, absolutely makes sense with the whole entire trade thesis here. So this is something that I will be looking at very closely, and I think this is probably my most preferred yen pair to date right now because of how they're moving in correlation together and then in line with the other yen pairs. So it's probably definitely one of the favorite ones for next week. Then I've got USD CAD. So USD CAD is definitely one that I think could go missed, only because it's just not the easiest one to trade. So we can see we have phase 1, phase 2, phase 3. We have this as the overall section here now, where we are moving in for the next phase where we move to the upside. We do want to be looking for continuation to the upside, truthfully. It just may not be the easiest one to decipher. So what I will be looking for, if I did have this on watch, was something like that, where we just basically came in, tapped into a key area, and then we had like a 1, 2, 3 within it. We did this, you know, something like that, and I could take advantage of that. But really and truly right now, it's not really my preferred. Even if we had something like this, right, where we just had a clear base and then we basically create something like that, that would be clear as day for me to then take the continuation to move. But at the moment, I'm just not seeing anything like that. I'm happy to stay out. I just think it could get a little bit more messy. There's a lot of better US related pairs on the table, and for that reason I'm just going to kind of get with that. So what I do like about this one is as we're seeing the DXY move higher, we could potentially be seeing pairs like USD Swiss move higher. Now in a sense, this kind of feels a little bit more of my hedge play, because of the pure reason that I'm looking at majority of shorts on a lot of the other Swiss pairs. So if the DXY is going long, perhaps maybe this could potentially be moving along with it. What I do want to see here is that we actually tap in and clear this base. So I need to give it a little bit of time for this to develop, but if we can create this as the base and then we basically have the level here, or even if we did come in, didn't quite tap it, near missed, and then we did this and it took a little bit longer, that would be completely fine too, because it would give me more of a reason to see this as a 1, 2, 3 into that base as well, and then it kind of confirms the two touch a little bit better with structure. But all in all, I'm not really too fussed with this one. I just want to kind of see some sort of development in terms of a structure so I can take this as a long position. If it shapes up, it shapes up. If it doesn't, it doesn't. We just wait for further continuations if the run is confirmed even more. It's just this is going to be our first clear flag in the sense of the run, so it does increase the probabilities ever so much for this to be a better play. For example, you had this point here, you know, had you been able to take the retrace there, cover yourself with even 10 pips, I think would have been enough. You know, eventually this ran for around about 12%. It did take a bit of time, but good things take time. USD yen, so I decided to leave USD yen out just because it is very, very much underdeveloped in my opinion. If we did get something like this, I would still want to be waiting for clear confirmation from the market, and this isn't the sort of large flag that I look for early in the run, so this is why I kind of just wasn't favorable for this sort of forecast. It's possible, it's definitely there, it's not the one really. I think even with USD yen and the DXY moving higher, if this just started moving to the upside for any particular reason, I wouldn't be surprised. So I'm gonna leave USD yen off the board, even though there is potential. Like, don't get me wrong, if it did this and just sold off and then kind of came up, created that, and then did this, right, you did have that and you could take that as completely valid. I don't see anything wrong with it. I just think that's not my preferred entry. I think there's much better pairs. New Zealand yen, of course. You know, you can see how it's significantly different to how USD yen is moving, even though they're moving in the same direction. So something to just bear in mind. And then USD ZAR. I'm not bothered with USD ZAR, to be honest. Like, it's just like, what is that, to be honest? Just corrective. So I'm just going to leave that one off completely. Not bothered about that at all. And then just a quick scan through the indices. So the S&P 500, still looking at short continuation here. Obviously, we could be finding a base at these levels, so we need to be very mindful of it. But the good thing is that the market direction is being a little bit more confirmed. So we just need to wait and see how price reacts, but also if we can formulate continuation over here, where it does something like that, get insurance entry, we could take something like that into these lows and then basically be profitable on the end of that. So we just need to wait and see how that formulates. JP225, one of the most favorited ones amongst them with Aussie 200, was basically if we can complete on this, that's basically how I'll be looking for it. And then you can see the larger range here, that if we get that large continuation there, we can get positioned on it, we can play this massive run. Aussie 200, now Aussie 200 is a little bit of an iffy one because we are breaking all-time highs, but we've rejected and we've pulled back below here. What I do want to see is clear deliberate price action now. As we're trading below that ray line, the line in the sand was basically triggered. So if we can get deliberate price action here, clear 1, 2, 3, I'll look to go short on it. Germany 40 as well. Sequence is looking pretty decent. We tapped into that area, we're pushing away. It's a little bit corrective, but there is sequence within it. So if we can come back and tap into that area and get an insurance entry, I'll definitely look to go short. If we come in structurally, then maybe I might even opt in for the risk entry, understanding the risks involved. Nice thing about this is this continuation is through that low, and then we have the low below it, so there could be an easy run into the next run. Let's say that for whatever reason we do get that insurance entry and we can take it with 50 pips, let's say, even to the next point you've got a 4-to-1, but then let's say you even were able to get in with about 20 pips, you know, you got a 10-to-1 into that low there on that with a reduced risk entry. With a risk entry, you could probably get in a little bit tighter. 10 pips seems a bit tight, but I'd say around about 13-ish, you know, you can still get in pretty decent, and then you've got about 20-to-1. So I wouldn't go too tight on this because for obvious reasons, but more than likely I think 30 pips would be a very safe amount to kind of just take on board for any erratic price action that could occur. And then, you know, you're looking at a clean 7 to potentially 10-to-1 on that. So that's what I'm basically looking at. US 100, not really for me. I just think it's majorly corrective within this range, so I'm happy to leave that one out. US 30, definitely looking for more continuation to the downside. So in line with the SPX, we could be coming into a base, but the base for this one isn't really determined yet, so it could be pretty much tapping into any area. Could even tap into retest this area. What we can see is we are getting momentum to the downside, so if we can get a clear deliberate continuation here, then great. I could probably get positioned in for shorts, but I just need to wait and see how that formulates so I can take advantage of it. US 100, same situation really. This is the only one that you can actually see that we're kind of hovering at that level of a base right now, so it's one of those ones where if that's the base, the top's not really confirmed yet. This starts to turn around, starts to do this, and then ends up creating something a little bit more larger, and then it makes its move higher, which I am not too unfavorable for. I think that's highly possible / probable for more continuation to the upside. And then, you know, we've got a bunch of these other pairs that I'm not really looking at, but there is some potential across them. I was looking at more continuation on a lot of these pairs. It's just I think we're filtered for a lot. And then going through the indices, commodities, we can see that we have gold. Gold is stunning actually, because we've completed on the 1, 2, 3, we've broken through that override, we're coming to the downside with momentum, we're now in the run off continuation, and if we look at it from a higher time frame, we are very, very high up in the run. Now, depending on how this continues, we may see a lot of selling pressure come in. I'm really interested to see if we get what type of continuation we get, if it's going to be something a bit larger than this, because Really and truly, although the 4 hour may just look like it's selling off like that, it is corrective. So there is a lot of accumulation within that already. So it's not just one big candle which then needs to require a larger flag. I think something like this weighted on the 1 hour, which has 3 clear sections to then go short, makes sense. And then perhaps maybe even lining up with a reference point, something like so, would, oops, the one just above it would be beyond perfect. And then we have something like that to play with. So that's basically something that I'll be looking at. Obviously the structure right here doesn't look the cleanest, but you can basically understand what I'm saying. Silver as well is coming in to tap into these lows, but I'm in one of those phases right now where I'm looking at, is this impulse correction, and then it just continues going higher, or are we genuinely just going to be turning around? Because what I can see here is that price is hovering in a range through that high, which then makes me think that this is the range for a continuation to move higher. Then if silver's going to move higher, will gold not turn around as well? So something I'm just going to be paying close attention to. But yeah, so we just want to see if we get clear price action like so, for example, while gold is creating its continuation. If silver does the same, then we may be able to take a short into that low with anticipation for it to break further, but then it's very much possible that we may even near miss this low and then start moving back up, feel that, and then just be playing within this overall range before we move to the upside. So there's a few variables on that, but I'm happy to leave silver off. Even though we're nearing to that low, I think sells are more probable because of how high up we're in the run, but we just can't call it short just yet because it's not confirmed. To really just confirm, we would want to see that low broken, continuation below it, and then we can go short further. Natural gas, it's just selling off really. There is a sequence within here which can be traded as well. I just think that it just requires a better level of patience. I think you'd basically be looking at it like that to tap into these areas, potentially come back in, do that, and then you go short, and then that would be your structure. That's basically what I would be looking for if I was going to be taking a natural gas short. WTI is stunning. I think WTI definitely has massive upside potential. You can see here that we're basically moving like this. If we get a push up insurance entry, that's a no-brainer, because then we can just see that we've basically filled these areas, pushed way below. We came in with 3 drives, 1, 2, 3 as well, pushed back up insurance entry. We're in a clear run to the upside. You look at the daily and you can see what phase we're in: phase 1, phase 2, phase 3, and then we're moving to the upside. So positioning in terms of a long-term trade is definitely there. So I think a trade like this definitely has much more to it, because you're not just trading an A to B movement on a lower time frame, call it a scalp. You're basically looking at it going for a bigger run than more than what it is. And looking at things like that, we know that it tends to come with a lot of volatility. So those are the reasons why you'd want to get into a position like that, if it gives you enough, basically. If it's clear, deliberate, and enough. But even if it goes and doesn't really give you an entry and it comes here, so be it, because you still have quite a large run ahead of you. Nothing to really report on palladium. Obviously, if you looked on the lower time frames, there is arguably, you've arguably got these points. Didn't really quite fill. I think that's really the point of interest for me. And if price just kind of goes like that and then does this, taps into this and then sells, I wouldn't be surprised. So just something to bear in mind, because you can see this as you've had that as the low, the retest, taps into it, that's the low, it comes in, retests, taps into it. Obviously the only difference now is that we're trading on that low, so we've got this to just be aware of. But we've pierced through it now, which is nice. We've got daily sort of confirmation, and we can see that we are in a clear run to that low here, so we just need to see how it follows through. But that's basically how I'll be seeing palladium. Platinum actually looked okay for shorts. I mean, we had this larger flag and then it kind of just created this large flag, and now it's just selling off. I think yeah, it is in the run of momentum to the downside, and the market direction is clear. I think we just want to see a little bit more structure develop. Something like this would potentially be nicer, where internally, let's say you had something and then it just led up to it, you had something like that, like fair enough. I just think wait for the structure to develop here, and then you can look for a platinum short into those lows there. Copper was stunning. There was a trade on copper as well here, where that turned out to be a 10-to-1 as well. You can see here that we've tapped into this, we scooped, we tapped into this, and then we're just kind of continuously selling off. So running into that sequence, we can see that there's a lot of potential within here. There was trades in there, trades in there, trades in there. So that copper run was actually really, really nice. But these are the things about sequencing, where if you can understand your PSE well enough, you can actually capitalize on these, make a huge amount of percentage. Coffee, not really much. Obviously we do have this, but it's just near missed this area here, so I will be giving it a bit more time to see what happens. If it does eventually come in and tap into those areas, then we can take a message from the market, but for now I'm just going to leave that be. Cocoa, nothing. Corn, still on its decline, obviously it is what it is. And then wheat is just tapped into those lows, so I'd give it some time, but I'm not looking to trade wheat. And then soybean just selling off as it's doing. There was that brilliant continuation here as well, which is quite nice. Come through May, and we can see it from here clear as day. Right, so that was interesting to have that and then sell off, and then basically have the other trade in there, but at the same time it's not the one that I wanted. So happy to leave it out. And then you've got BTC just clearly moving to the upside. Obviously, you know, we've been monitoring this for a long period of time, and then we could see it come in here for 54 and then making its clear move. So in terms of a run, this could really be the start of a massive bull run, where, you know, you've got your phase 1, phase 2, phase 3, I think perhaps maybe more so here. And then if we're looking at it from there, you could be looking at easily around about 90, 97, 98 region. And then if it does pierce above further, you know, it goes up to about 120, 120. So that's looking great. I think across the board we've got a lot of pairs on watch, got a lot of pairs shaping up. So yeah, I'll filter that all together for next week. Obviously these are the ones that I've really filtered through, and I'll be looking over again. But yeah guys, have a great weekend, and I'll catch you guys in the next video.